What's good, y'all? Welcome back to another video. Today we're going to talk about how to navigate a choppy market, or better yet, how to even identify that you're in a choppy market, because a lot of people, they will trade and not really understand what kind of market they're in and, suffer because of it. Before I even start trading for the day, I always establish what kind of market I'm in so I understand the kind of risk I should be putting on, position sizing, what I should be looking for, so forth and so on. So in this video, we're going to go over how to identify those things and also how my risk management changes based on the type of market we're in. So number one, I want to let you guys know the day always starts on a bigger time frame, right? 4-hour daily time frame. I don't go anywhere until I look at those, right? Why? Because I want to see where we're at. So what do I mean by that? So for me, there's three types of markets, right? There's a trending market, ranging market, and there's a choppy market. Trending and ranging, those are good to go. Choppy market, you want to stay away from. How do we establish what's a choppy market versus a trending or ranging market? Well, so it's really simple for me. I look at the overall direction of the market. If I cannot tell what direction the market is going on a bigger time frame, then it means to say, hey, we may be choppy, right? If there's lack of direction, we are in chop. That's the definition of chop, lack of direction. So if you look at the daily chart here, you can see right here, we are in a daily consolidation phase. Now, what does this mean? Does that mean, there's no opportunity whatsoever? No, it doesn't mean that. But what it does mean for me is like, okay, what does choppy market mean, right? A choppy market means lack of direction. Now, what usually happens during a market where there's lack of direction? That means we're moving sideways. There's lots of up and downs, a lot of wicks. So what does that mean for my risk management? Hey, lighter size, right? Lighter size. Maybe I scalp a lot more. I don't hold trades because there's no direction. If there's clear direction, then I would hold trades. But if there's no direction and we're most likely going to get wicked out, then maybe I should look to scalp, right? So with this mindset, I understand that light size and possibly scalping opportunities are the way to go. Also, number three, light size, scalping opportunities, or simply not trading at all, depending on what the market really looks like. Now, we're on the daily time frame. It's a really big time frame. It can move in very wide ranges. So that's one thing to take note of. But again, I usually am most aggressive in the market when the daily and 4-hour are giving me clear direction. Let's see an example, right? So here, you can see that obviously we're in a downtrend here, right? On the upside, obviously we're in an uptrend, right? We come over here, no direction, more choppy than anything else, right? Over here, no direction, more choppy than anything else. We look at this right here, clear uptrend, clear downtrend, right? Clear uptrend, right? And these are multi-day moves. So these are moves where we can go into the market and say, hey, we're bullish right now. We're going to look for bullish opportunities, right? Even here, like for me, I always want to make sure that I'm trading, very aggressively on days where we're getting maybe daily breakouts or 4-hour breakouts or hourly breakouts. But right now you can see we're not really getting that. For me, I won't really get aggressive again in the market, like really aggressive, until we break. All right, we got to break this choppy range, right? We just got to get out of here, right? And there's opportunities. I'm pretty sure there's people making a bunch of money right now just off crazy scalps or crazy, just trades in general, because there's always some type of opportunity in the market. But for me, this is my strategy. This is how I stay in the game, because a lot of people will lose money. It's not about capitalizing on days where it's trending and the market looks really good and everybody can make money. It's about not losing money on the days where the market looks like this and everybody's losing money, right? Can you keep your capital protected, or just simply get in and get out the market, quick base hits, right? And sometimes that means, hey, I got to go in and just be okay with being red, right? I got to be okay with being red today because today's just a really hard day to trade, and I'm not going to go on tilt and try to get that money back, right? That's just something you have to consider. So for me, I won't look to get aggressive until we break out of this choppy range. For me, again, I like to be aggressive when the market is showing clear direction and when the daily or the bigger time frames in general are giving me some type of breakout, right? What do I mean by breakout? Well, just a quick example. We can see here, right before this price action, assume this price action to the right did not exist yet, I would be looking for something like this, right? Rejection, rejection, rejection. Can we break this level of rejection on the daily time frame? Yes, we can. And you can see following that, we had 2 really good days, or a day and a half of very solid bullish action. For me, that's lovely, right? I love price action like that, right? Again, let's find another example, just a quick one, right? Let's see, we have this right here. We came up, rejection, 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 right? Came up, we broke the level, retested the level, and look what we did after that. Really solid direction, really solid move. A simple break and retest on the daily time frame let me know that we were going to be bullish. And you can see we were bullish for like 2 or 3 weeks here, or a week or two, right? So for me, again, we're still in this choppy range, so I'm not looking to be aggressive, right? So just off one time frame, the daily time frame, I've already gotten all that knowledge, all that. I've already prepared my risk in a way to where I'm going to make sure I'm protected. Right now, if I go on the charts, first thing today, and I just go straight to the 5-minute, I really don't know what to expect, right? And granted, like, and this is what I'm talking about, really crazy move on the intraday time frame. But you know, for us, it was I made a couple dollars today, but it wasn't anything crazy. It was actually very hard to make that money because look at the first hour and a half of the market, right? This happened at, what time was this breakout? This was at what, 10:30? I think it's EST. No. That's 10:30 my time, Central Time. So what, 2 hours of price action? The first 2 hours of the market were this right here. This was the first 2 hours. This is not a great market to trade, right? In the daily time frame, because we saw the daily time frame and we understood where we were in the market, there's no direction. This price action made sense. So I was not surprised. I actually was able to prepare for this price action. Lighter size, quicker trades. If I'm not looking at that, the daily time frame first, I'm coming in here blind. I don't know what to expect. I don't know how to manage my risk. So therefore, I'm opening myself up to more risk. And this is where a lot of people lose money. Now, granted, again, really good move right here. I don't know what happened, maybe news or something. I'm not sure. But with my strategy, I have no FOMO. Because with my strategy, I trade less than an hour a day. I think on average, I actually trade about 15 minutes per day. 15 to 20 minutes per day, 1 to 2 trades. That's it. I am not on charts for a very long time because that's simply not how I like to trade. I used to be the type of guy who could be on charts for 6-7 hours a day. But for me, not anymore. 15, 20 minutes, in and out, base hits, move on to the next day. Hey, it's what we do in the straight shooters community. That's what we're about, right? We do it every single day. And look, the first 2 hours really choppy. The first hour, super choppy. Hey, there's nothing here for me. There's nothing here. And none of this was surprising because the bigger time frames show no direction whatsoever, right? So the moral of the story is, guys, if you want to be prepared for the market, if you want to make sure that you are properly managing risk and properly managing your expectations and protecting your psychology and protecting your account, you need to make sure that you start from the top and work your way down. Find out what kind of market we're in, right, on the bigger time frames. Get your levels as you go down, and then execute on the smallest time frames, whether that's going to be the 1 minute for you. For me, it's the 5 minute. But at the end of the day, none of it matters if you don't know what to expect from the market, right? So that's all I got for today's video. I will see you guys next time. Next video, I will be talking about scaling in, scaling out of trades. That's been a heavily requested video. I just had to stick this in here really quick because we've been in a choppy market all 2025 so far. So that's what I got. You guys have a good one. I'll see you guys next video.